Numerous retail establishments continue to close. Due to the multiple pressures on our purchasing power, the retail apocalypse is still spreading across America. Most of us have a decreasing amount of money left over after paying our monthly expenditures for housing, utilities, petrol, groceries, and other obligations. Moreover, some of us are saving that money instead of using it to prepare for the impending storm. As a result, even some of the largest U.S. corporations are seeing declining sales, declining revenues, and poorer earnings results. Advantages of automatic cleaners. With the pandemic, supply chain issues, inflation, and skyrocketing commodity costs making conditions for these enterprises exceedingly challenging, many were barely making ends meet after 2 extraordinarily terrible years for our economy. Moreover, they must make some difficult decisions as the holiday season approaches. Even household names like McDonald's and Disney have announced they will close some locations to save costs and weather the economic crisis that is playing out right before our eyes. In this video, we will show you 10 major retailers that are closing down stores in America today. Stores that were thriving during your childhood days might soon be gone forever. The COVID-19 pandemic brought a severe blow to America's stores. There were already severely damaged reports that more than 15,500 stores were closed in 2020. This includes retail giants such as Macy's or Bed Bath & Beyond. And the work still needs to be done. Since then, hundreds more closings have occurred and many companies have upped their physical locations. These are the most significant losses. Christopher & Banks. Bronze Fashions was founded in 1956, and this women's clothing retailer filed for bankruptcy in January 2021. It stated that it intended to close a significant percentage, if not all, of its brick-and-mortar stores. Only a few hours following the bankruptcy filing, liquidation company Hilco Merchant Resources announced going out of business sales of 40% to 60% off were beginning at all 449 locations. Cozy cardigans and knits were on sale for the first time in a long time. Christopher & Banks CEO Ken Jones stated that the company decided to end its existence due to financial distress resulting in the pandemic's ongoing impact and the continued financial distress. Family Video. The scrappy movie rental company outlasted Blockbuster but couldn't keep going. It announced that all remaining stores would be closed in January 2021. It became increasingly difficult to justify driving to get a few Blu-rays despite the convenience and quality of streaming services. Family Video had already culled nearly half of its 510 locations by 2020. The company released a press release stating that while we have been confronted with digital competition from Netflix and other companies for many years, nothing has been more devastating to our business than COVID-19. Starbucks. Do not worry about macchiatos. The world's largest coffeehouse chain will open just as many new stores as it is closing. Starbucks announced plans to close 500 U.S. stores between 2020 and 2021 to allow it to focus on curbside pickup and drive-through options. Kevin Johnson, Starbucks CEO and president, explained during an earnings call in October 2020 that there would be a slight surplus in stores after the transformation was complete. Johnson stated that new store openings in the Americas are expected to be around 850. They will mostly be in the U.S., with approximately 800 store closings in the segment in fiscal 2021. This will yield about 50 new stores. Gap. A new clothing line, Yeezy Gap, was to hit stores in the first half of 2021. However, even a 10-year agreement with Kanye West, which was recently canceled, will not save this iconic brand. According to Forbes, consumers are less interested in apparel that is considered overpriced or plain than fast fashion brands such as Zara and luxury brands like Nordstrom. Gap Incorporated announced it would close 30% off Banana Republic and namesake stores in North America by 2023 to have a smaller, healthier fleet of stores. This will move most of the stores from malls. We've been too dependent on low productivity and high rent shops, President and CEO Mark Breitbart stated in a release. Justice. Ascena's growing debt also caused the loss of another tween retailer known for sequin-covered tops and glittery earrings to its retail empire. Ascena, the longtime owner of brands like Ann Taylor, Loft, and Dress Barn, went bankrupt last year, taking over 600 of its 826 Justice shops. In 2019, all Dress Barn stores were closed by the company. After selling the business to Blue Star Alliance LLC, Ascena announced it would close all Justice stores by 2021. Ann Taylor, Loft, Lane Bryant, and Lou & Gray were sold to Premium Apparel LLC at $540 million. Catherine's was sold to Full Beauty Brands operations at $40.8 million. Between 30 and 40 new Old Navy stores and 100 other Athleta shops. Disney. The mega brand pulls money from many sources, including its famous movie production company, a string of theme parks, and a successful streaming platform. But more than a varied portfolio and a pinch of magic are needed to save all its stores. In March 2021, the Walt Disney Company announced that at least 60 Disney stores selling clothes, toys, and other merchandise inspired by its films would be closing in North America. Instead, the conglomerate will focus on its digital Shop Disney platform. This platform will allow greater integration with Disney Parks apps and social media platforms. Bed Bath & Beyond. Bed Bath & Beyond is probably too short to be called a home goods retailer. The vast spaces are filled to the rafters by a dizzying array of everything from couches to candles. The company stated in July 2020 that due to the foot flu epidemic, it would close approximately 21% of its U.S. and Canadian stores over the next 2 years. That's 200 locations. 63 of these locations would close by the end of the year. Bed Bath & Beyond officials said that 43 stores would close by February 2021 and the liquidation sales had already begun. Best Buy. Best Buy wants to refrain from subsidizing brick-and-mortar shops despite increasing online sales. It intends to close at least 20 stores this year. The company stated that while some traffic may shift to the store channel in fiscal 2022, like many retailers, most of what they saw last year would remain during an earnings call. Best Buy stated that it had closed 20 stores in its previous 2 years and expects to complete more in the next year's earnings call. Although it had planned to hire 2,000 part-time employees, it laid off 5,000 employees. The company is trying to remain agile by reducing its lease terms. This could mean that the cuts may be sudden. GameStop. A legion of investment pranksters sent GameStop stock to orbit last year, but it doesn't appear as if they have shopped there. Over the past 2 years, the world's largest gaming retailer has closed hundreds of stores. Recent hijinks have kept their plans the same. GameStop had planned to close 1,000 stores by April 2021. Although the company is making significant announcements, observers have reported an increase in clearance sales. This suggests that the culling is still ongoing. The gaming industry is booming as more people can avoid public spaces. However, GameStop doesn't share it in the joy of digital downloads. Kroger. In Montrose, Texas, locals are grieving the loss of the Disco Kroger, named after a nearby discotheque that arrived in 1980. Night revelers would wander the aisles carrying a bag of munchies. The supermarket chain said it does not intend to close any of its stores. However, To maintain low prices for customers all over the city, it is impossible to continue operating a store that has been losing money for a prolonged period. Kroger stated that it would not reduce employees when the stores closed in January 2021 and would offer jobs at nearby locations instead. Another Kroger in Norcomas, Illinois, was completed by the end of January 2013. In February, a Ralph's and Food 4 Less store closed in Long Beach, California. 2 QFC stores were also closed in Seattle. Another 2 Ralph's and 1 Food 4 Less store were closing in Los Angeles in May. In conclusion, large-scale, consolidated, centralized, and sophisticated retailing has emerged. Retailers have made significant progress towards controlling the value chain, creating powerful retail brands that inspire long-term consumer preference and loyalty and foster sustainable distinction amongst direct retail competitors is the next big challenge and opportunity for retailers.